So first off, I'm so glad to be on a podcast not talking about blockchain and cryptocurrency right now. Have a party. And thank you for having us. But so the idea for the Dream Exchange actually came from I was the lawyer for the founders of Archipelago in 1995. So we really that was really the first electronic platform that was you know creating what we now know as best execution, best price. And I was a capital raiser for many, many, many small companies, but I really discovered that the notion of an exit for a business to the public capital markets had died, and it really died somewhere around 2005, 2006. So I started doing a lot of research, and I realized going back, I really enjoyed your first two segments because the real asset that the country has is its ideas. We're the greatest innovators and most imaginative people on the planet. And what we have to do is restore a public capital pipeline to the emerging companies that have the best idea really do become the fabric of our country. And this is not a new problem. It's been around for about 25 years. We don't really publicly finance our small caps. So this is where the idea came from. Dwain has been my partner for 21 years and lawyer, and we worked on all these small businesses. And really, that exit is extremely important to have the hope of a public liquidity event, and that's what we decided to do in building the exchange. Obviously, we've built a national
Sure.
market.
So, and Dwain, you recently applied with the SEC for, I don't know the right terminology, but I guess for licensing to be a nationwide exchange. That process,
That's correct.
How important is it to gain that? I would imagine it's the key to success here. And what is the likelihood you'll get the go button within the next few months?
Well, you're right. It is absolutely necessary. In order to be a stock exchange, you have to be licensed by the SEC. And this has been a long process, as you have alluded. We are hoping that we'll be able to make sure that people who have long had great ideas, have worked hard, done everything that they were supposed to do to realize the American dream, but have generally fallen short because of their lack of access to the relationships and the resources that come from the capital markets and the infrastructure that supports it. These folks will, have had a very hard time getting access to the capital. The public capital markets are the answer. They're what built America. And to the extent that we have now, we will make access to those resources available to people who have small and mid-cap companies. It will be extraordinary. And we do expect that it will happen sometime this year for sure.
David?
I knew nothing about this, coming into this show, Adam, and this is a fabulous idea. I do a lot of direct indexing, so I know the drain on the number of companies that are out there trading publicly today are so far less than what they were. You look at some indexes that were supposed to be 3,000 or 4,000 companies, and they're down to 2. So we need this. I guess, Joe, I'll put the question to you. The question that I would have is the due diligence involved here, and also the education process for the investors to look at these companies. How do you manage both sides of that? Because it is an issue. You want to make sure that that people on both sides of the equation are protected here.
Yeah, that is the ultimate question. It's not just that you've got somebody who's got a great idea. It really is a market education. I mean, here we are. It's a market educational process that we're in. That's actually one of the entire phases of our strategic plan, because small caps have an entirely different marketplace. We've actually worked on a piece of legislation called the Main Street Growth Act, which is working its way through Congress. It actually passed the Congress unanimously in 2018, and had we not shut down the government, it would have been the law. And it creates a new type of exchange called a venture exchange. Now, that's got a bad word in most countries, but in the United States, this legislation it's a brand new type of exchange. And our primary job, is educating not only the asset allocators, and the large asset aggregators, pension funds, and 401k plan management into how to use this new type of market, because it does dovetail into asset allocation. It does give people something that we as an exchange have undertaken a tremendous amount of complexity in the application and due diligence process. So you're getting a really vetted company before it can reach a public market. And we haven't changed any of the requirements that go along with public market registration. So the good news is it's small, but it's a high bar. So we only want really quality companies. That's the educational process that needs to come in. I'm actually on the board of the University of Wisconsin's Lubar College of Business. We're actually doing a curriculum. So we have a Dream Exchange professor of finance at UW Milwaukee, and there's an entire curriculum. It's a brand new industry about to be born. So the educational component is going to be really done through a lot of resources we're dedicating to making sure the market understands the difference between, a high volume, high arbitrage, perhaps a dark pool marketplace, and this other marketplace where, you saw the Russell 2000 take a major hit and a recovery. They never went below their 52-year low in the last. But, they're in a marketplace where, 2 billion shares trade in 1.64 seconds every day. So the small caps do not thrive in that environment. So we're segregating out that marketplace in a way that will allow true investing and keep companies listed and keep them growing. NVIDIA, they were almost delisted by the NASDAQ 7 years ago.
I remember that.
So what you have to look at is, what's the idea? What does the company really have? Not only do they have, plant and equipment, but what's their IP? What is the thing that is going to make that company extraordinary? And we're really trying to reach Steve Jobs in the garage. We want to reach that company at its earliest possible stage, and in communities and environments that perhaps other exchanges are not willing to go. It doesn't make them a lot of money. Let's just say it.
Do you have, real quick, if you get the yes from the SEC tomorrow, do you have companies that are saying we're ready, let's go? Are you talking to companies that want to go public?
We are, and what we're doing right now, actually, this is going back to the point, is we're not just assuming we're right. So there's about a 9-month process we're in right now, which is a bit of survey of the membership and survey of investment banks and survey of how they may view underwriting and investing in this marketplace. Because we have companies, we have some extraordinary technologies and individuals that have, some companies are approaching $1 billion in annual revenue. They're not interesting to the public markets right now by virtue of the fact that they might not be a multi-billion-dollar IPO. So, the market shifted from the number of deals it did per year. We were doing 700-800 IPOs per year, up to 2,000. Then, with the advent of high-speed electronic trading, we were doing less than 200 a year. And most of them grew in size, but the important part was they grew in share volume. So we shifted the revenue model in the banking world and in the exchange world from number of deals done to number of shares traded.
Gotcha.
So this is a new market where number of deals done, we're actually able to restore a revenue stream to the underwriters, investment banks. We're making it really economically sound to take a small cap public on our exchange so that we can grow the number of listings that are available for the day-to-day market to asset allocate to. We only have about 6,000 listings, and 2,500 of them comprise most of the trading in the market.